Hi, hi, hi. Hope everybody's doing well. It's a Saturday, so we were basically back testing. Um, Today I kind of decided to back test something I just thought of because of a different strategy actually. So I was back testing the airman model, but I was using some of the confluences from the TGR strategy. So while watching his bootcamp, I learned that literally market structure can be made of two candles, an up candle and a down candle. And then the next candle that forms from that, if it body closes above those two candles or below, that could be considered a market structure break. So what did I do? I tried to put that into practice by using it on the 15-minute, because usually I use the 15-minute time frame for the AMN model as high time frame. Then I go to the 1 minute for like uh, my entry signals, or like not even signals. I could just say like entry confirmations basically. So as you can see here, I think I have two examples on the GBP side. So this would be considered a down candle. This would be an up candle. So the high of both of these candles is here and the low is here, right? So we draw a range there, and then we go into the 1 minute chart, and we start to look for the six taps from there, right? So just get rid of these real quick. Let me show y'all. Um, let me see. Just try and scroll a little bit. All right. So yeah, this was kind of the first example. So as you can see, we kind of have the high. I should have actually adjusted this because I thought that price actually missed, but you can see that you could actually adjust this to down here, right? And look at that. What do we have now? One, two, right? Three out of the range, four tapping back in, five and six tapping back, and then an entry signal right here. And obviously you target a 1:1 risk to reward ratio, right? So let's see if that would have played out. Definitely would have played out. Look at that, 1:1, putting your low at the lows just to protect yourself, right? And then you just target a nice 1:1 risk to reward ratio. Look at that, beautiful price action, bro. Couple of minutes, you're in and you're out of the trade. I actually thought this was a miss, but as you can see, what we did: first tap, second tap, third tap out of the range. Fourth tab is literally on this sort of equilibrium range here, right here. So let's see. Yeah, I was about to say price ever so slightly almost didn't tap, but it definitely did. It wicked in there, and then the next candle, body closed above. So that obviously in itself would have been an entry. We will treat that as sort of an TCISD entry. So yeah, man, the entry, the AMN model, I think with this confluence will be much more easier for myself. Um, a lot of these models I think is really cool to take and then to use your own take on it, to use your own sort of confluence with it to understand it. And yeah, I think this is one of the benefits of having more than one strategy, because you can take one confluence and then add it with another strategy, and then it sort of kind of becomes yours. You make the strategy your own. So yeah, the second example that I thought was the only one that played out, but as you can see, that one actually played out as well, was this one. So what I'm learning also from this, because obviously this is also like a vocal journal, is that when I get to the 1 minute time frame, I should look at the overall highs and lows and try and adjust that range, not to just stay fixated on how I drew it on the 15-minute. That's basically what I took from that example right now. So this one here, I think we also kind of adjusted it, but it was already in sort of like a nice sort of range. So as you can see, first tap right there, second tap, third tap right here, fourth tap, I already labeled it, fourth tap right there. And then let's see, price went higher. Okay, actually, this was a miss. But as you can see, this could have easily, easily played out. I mean, if I adjust this here, can I see? Okay, three, four, still five. We didn't really get a six tap and a confirmation. So, but yeah, price action kept on going to the upside. So we probably would have went to the higher time frames and maybe in the next 30 minutes, because that's how long it takes to form two candles if one is an up and a down candle. Or we can literally use that concept to sort of, even if let's say we form two bullish candles, we will look at the most recent bearish one with those two bullish candles and make that our range. So it's not like you stay fixated on the two candles, but that just helps you understand range, especially on the higher time frame, better. So thank you guys for watching. I'm really glad I did some back testing to